Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello, everyone. I want to say a very good morning and welcome all of you to the very last live stream of the year. Please say hello. Please let me know that you're tuning in and you're here. It seems like we have a relatively light crowd, which I'm not surprised by because most people have kind of wound down their entire trading for the year and they're just kind of, squaring up. Let me know. Good morning, everyone. Good morning, Park, Denise, Andrew. Are you trading this week? Are you just kind of watching the markets, tuning into me telling you about what could happen, but not really looking for trading opportunities? Or are you ready to go for more trades in this new trading week? Let me know. Good morning, Akash, Dasa, Keith, Denise. Not too much trading this week. Yes, that's probably what most people are doing because usually we have a much larger audience for our Monday live stream, and maybe they're kind of streaming in. Everyone's enjoying the weekend. I think just looking, Andrew, is probably the best case scenario for most people. I know that Boris, for those of you that are with us, I think he might be trading later on. So he says that he will be trading later on. So for those of you that are trading junkies who are still looking to trade this week, he will be trading after our usual kind of talk about what could happen. Now, this week we're looking at 2 weeks ahead because for two reasons. Number one, I'm not going to be streaming next Monday. Number two, we really don't have much in the way of data. So, we're able to kind of talk about what's going to happen both weeks. But, before we do so, I know, it's been an incredible year, ups and downs and everything for, I think, everyone. And I want to know, has this been a profitable trading year for you? If it has, give me a thumbs up. If it hasn't, give me a thumbs down. Let me know how this year has been going for you. Or are you just beginning? You can tell me, are you just beginning to turn profitable? If you've learned from our live streams, give me some green hearts for money. So if you've learned from our live streams, you found them valuable, let me know. Because I personally really enjoy doing these on Monday. I really enjoy talking to you. I enjoy, kind of helping everyone frame their mindset for the week. For me, it's all about prepare, plan, and execute. And that's kind of my theme for trading in general. You want to, be prepared, learn what's going on so you're not caught by surprise by anything that may otherwise be obvious for someone else that everyone else knows about that you may not. We want to be able to be prepared for what's ahead in the coming week. We need to be able to plan what our potential trades are. And that's why we look at all of the economic calendars. We look at, what's ahead of us. We talk about what is expected so we can plan. And then when our setups come, we're ready to execute. I do this for my, regular day trades, swing trades. And we also do this for our news trading. Prepare, plan, execute. That's really been the theme. And the Monday live streams, I hope is, or at least for me, is a large part of that entire process to prepare, plan, and execute. And we want to carry that into the new year. We want to carry that and make sure that, Boris has some of these, let me see if I can find one of these fun emojis that he's put on, that we can, be reining in the cash in the new year by preparing, planning, and executing based upon that. So, on Monday of January 6th, we're going to be back with a powerhouse live stream. Make sure that you join us because that's when we're going to be talking about, everything that's expected in the week ahead. We're even probably going to talk about the year ahead. However, we've got, in some ways, 2 more weeks before the full end of the year, although next week is, half 2024, half 2025. So in that case, what does that mean in terms of what trading could bring us in the next 2 weeks? As I said, Boris is still going to be live trading after this live stream. I am done for the year. And I'll talk a little bit about, that. It's not just because, I'm ready to go on vacation. It's, because my trading strategy thrives in a specific environment. And that is not the kind of quiet, consolidative mode of year end. But as we head into this new trading week, let's talk about what's, the sentiment in the markets. So every single trading day I come on, I always look at what's the vibe of the market, what's the sentiment, what is everyone feeling. And to do that, we look at, a couple of things. Number one, we look at what stocks are doing. So this morning, you can see that stock futures are up. And what's kind of interesting is that the Santa Claus rally that was supposed to transpire this new year has not yet. Sorry, I'm just going to raise my chair. The Santa Claus rally let me share my screen. I realize I haven't shared my screen. Okay. So I always look at, what's kind of the sentiment in the markets. First off, we see stocks. There's a bit of profit taking. Not a huge surprise. We saw a tremendous amount of profit taking last 2 weeks, or especially last week. As we go into year end, people are taking profits because of tax reasons. Maybe they're closing their losses, they're squaring up the books. All the funds, usually they like to mark certain things to the market. And so they're just kind of squaring up for the year. And we're seeing a little bit of that today too, which is a little bit surprised because we're supposed to be moving into the Santa Claus rally period. And maybe this year may not be, the Santa Claus rally period. We'll have to see. Let's bring in our seasonality and see what's, see where we're at. So, traditionally, 7 out of the last 10 years, we have actually seen December be a good year for stocks. Look at this. This is kind of even more interesting. We didn't really talk about this in November. In November, 9 out of 10 months is a positive year. And that was true of 2024 as well. Look at July. I mean, we're a long ways from July, but come July, I'm going to be talking about this. We're going to remember this. And we're going to remember how, July tends to be a very, very strong month. Every single month in the last 10 years in July, we've seen stocks rally. But right now, we're in December. And December is supposed to still be a good month for stocks, especially the last 2 weeks of the year. Now, we're just beginning, but we only have, we do have a couple of trading days. There's a whole bunch of holidays, like you can see. If we go to New York Stock Exchange holidays, you can see that with the stock market, the markets are obviously open today. They're open tomorrow, but they're closing early tomorrow. They're closed on Wednesday. They're open on Thursday, Friday, and Monday and Tuesday. So we have 1, 2, 3, 4, 5 days of stock market trading left to make that year-to-date gain, to turn this positive. I don't think it's going to happen because on December 1st, we were at record highs. We're at 45,000. Maybe, it could happen, but that would pretty much require a pretty dramatic rally and consistent rally after today. So that really is, tomorrow's a half day. I don't think stocks are going to turn positive today. So tomorrow's a half day. So that means we have 26, 27, 30, 31, only 4 trading days to turn positive. Maybe it'll happen. Maybe it won't. I personally think at this stage, it may not happen, but we don't know. Anything can happen in low volatility environments, but stock futures are down today. Even though stock futures are down, the vibe of the market isn't all that bad because, most of the major current, like the yen pairs are up, the yen crosses are up, U.S. Treasury yields are up, the NASDAQ is actually up. So it's really sort of, maybe, I don't know, it depends on how you look at it. It's pretty much flat, but for the most part, the NASDAQ is not doing as terribly as everything else. And the NASDAQ has more seasonality, if you see down here, more greens than reds. So the vibe of the market is a little bit of profit taking. I wouldn't describe it as risk aversion, just a little bit of profit taking in the markets. But the one thing that is very consistent is US dollar strength. The dollar, let's get rid of this. Let's get rid of the seasonality thing so it doesn't pollute the chart. The US dollar is up across the board. The US dollar is up against the yen. You can see it's up against the euro, the British pound, the Swiss franc. The dollar bulls are in control. And dollar bulls are in control even though we had, weaker durable goods orders this morning. No one really cares about durable goods. I mean, it's important in theory because, big ticket items, whether businesses are spending or not, but it's not really that big of a deal. The dollar is in control. And the dollar is in control, and that is how we're going into this new trading week. So the question is, what could shift this? What could remove the power of dollar bulls? What could change it and cause it to move lower? Well, looking at economic data, we talked about how we have durable goods, and then we expand this to the next 2 weeks. So we talked about how we had durable goods, and that came in weaker. Market really didn't care about that. Later on at 10 a.m., we have the the Conference Board's Consumer Confidence Index. Given, just how well stocks have done, the enthusiasm from the Trump win, the excitement for the new year. Also, the dollar is up because the government did not shut down. Just the coming off of so much, mostly better U.S. data, consumer confidence should be relatively firm, in my opinion. New home sales are not going to matter at all. And then in terms of just skipping just to look at the U.S. data, we have nothing on Tuesday. We have nothing on Wednesday. We have only jobless claims on Thursday, which is not going to matter. Nothing really all that important on Friday. On Monday, we have Chicago PMI, pending home sales, also not really all that important. Nothing Tuesday, Wednesday, pretty much everyone's in holiday mode. Thursday, people are coming back. We have the ISM Manufacturing Index. This is the only important piece of data on the calendar for the next 2 weeks. And it's coming on Thursday of next week. That could end up being a little bit softer. But for the most part, there's really nothing standing in the way of the dollar rally continuing except for profit taking. And that is a risk. That is a significant risk. For dollar yen in particular, there's a little bit of risk tomorrow, tonight, and then later on in the week with the BOJ minutes tonight. If the BOJ minutes, which last week the Bank of Japan left interest rates unchanged and gave no sign that they're in a rush to raise interest rates, so the yen fell. If the minutes reveal any unexpected hawkishness, that's going to drive the yen up. And also later in the week, we have Japanese Tokyo inflation data, Japanese retail sales, industrial production, unemployment rate, Japanese data dump. Any strength in the inflation data could also drive the yen higher. So prepare, plan, prepare, execute. There's nothing standing in the way of US dollar strength this week, except for potential profit taking. But for the yen pairs, which is where we've probably seen the some of the biggest moves, the yen component of the trade could have some risk. And that could come tonight or later on in the week with the data dump that we talked about in Japan. So if you're trading the yen pairs and dollar yen, those are the days you want to be a little bit more careful. Now, taking a look at the general heat map, as I said, there's not a lot going on this week. So it's really going to be about where do these central banks sit? Where do the central banks think that interest rates are going to be in the coming year? Now, I'm going to give you a little quiz. Which one do you think is the most hawkish central bank of all these central banks that you're looking at in my heat map? Take a wild guess. The least dovish, most hawkish central bank. And I promise you, there's a wrong answer, but I think many of you will get it right. Gorilla says yen. David says dollar and yen. Denise says yen. Fernando says uida. Manuel says kiwi. Miss Factor says Swiss franc. Akasha says yen. Japan. Andrew says Japan. D Online says pound. And Park says US. So all my friends who said Japan and the US are absolutely right. And even though, so Japan is definitely the least, is the most hawkish because they're the only ones raising interest rates. But even though they are the most hawkish, the market cares so much more about the dollar, who's, I would say, the least dovish. I wouldn't say hawkish, but the least dovish, and the one that's probably the most reluctant to cut interest rates. The market cares much more about the dollar because what's really important to realize about what central banks are doing and where they're headed is that it's not about what they just did. It's about what they are planned to do compared to what the market thinks they're going to do. And to explain this further, what I mean is that the market had expected more than one interest rate hike from the Bank of Japan this year. They only did one in the summer, I believe, and then they didn't stopped. And even though they are the most hawkish, they are still not ready to push the go button on another interest rate hike in January. And it's kind of wishy-washy. And so while they are the most hawkish, and those of you that said Japan is correct, in many ways, the least dovish and the most bullish is still the dollar, because the market had anticipated 3 interest rate cuts from the Fed next year. And just this month, they told us it was most likely. Of course, things can change, and follow us on live stream every Monday. We'll talk about the changes as they happen. But they just told us in December that it's probably just going to be 2. And given that it's probably just going to be 2, and we just learned that it's probably just going to be 2 this in the beginning this next year, the dollar is the most bullish, and the Fed is probably the least dovish. And so dollar and yen are the right answers in some ways. So as I said, we're going into this new trading week with dollar strength. The market's excited and happy that the U.S. government did not shut down. Remember last Monday, I told you that it probably won't happen. And even if it does, it's going to be short-lived. And it didn't happen. They really can't let this happen. And they have. And even when they do let it happen, it's only lasts for a brief period of time. So that's exactly what transpired. They just, it's political maneuvering in Washington. But when they buckle down, they always end up getting an 11th hour deal. So my point is that going into the new year, the Fed is the least dovish, and the dollar is bullish, and I continue to remain dollar bullish. I think that there could be some profit taking the next 2 weeks, but it'll probably be more of a buy on dip than sell on rallies. For the Eurozone, just this morning, ECB President Lagarde said that they are getting close to their inflation target, which means, previously inflation was kind of high. Now they're saying they're getting close to the inflation target, which means that they probably feel that they remain flexible to continue to cut interest rates. And they really need to. Eurozone data has been unambiguously weak. And they've got the political crisis in Germany. They've got the political crisis in France. And what that means is that nothing really meaningful is going to happen in terms of fiscal stimulus or fiscal policy. And they are going to continue to cut interest rates pretty aggressively next year. So euro, I think is going to parity. I think euro is going to go to parity. I think it's already weak. I think it's just a matter of time before we go to parity. So I think ECB is one of the most dovish central banks in the new year. Now, for the British pound, the Bank of England didn't really cut interest rates that much this year. But UK data has also taken turn for the worse. And so they are expected to cut interest rates 100 basis points in 2025. That's a lot of interest rate cuts. And that's double the amount that the Fed is doing. So that means that we could still see quite a bit of weakness in the British pound. The British pound this morning is one of the weakest performing currencies. I think we could definitely see a new 6 to 7 month low in the British pound. We'll probably see it on the 123 handle, maybe even the 124 handle. I think that there's some good significant downside to the British pound, and I think there's definitely some further weakness there. So I'm bearish British pounds this week into the new year. The Australian dollar is kind of neutral. With the Australian dollar, if you click on these cards, they all expand into more detail. I am neutral, the Australian dollar. The market is not pricing in an RBA interest rate cut until June of 2025. Now, we had stronger jobs report, but the PMIs and the inflation data was weaker. And the RBA has finally this month signaled that rate cuts could be coming next year. And we know that Chinese growth is slower, and we know that Australian dollar is kind of like the proxy for China, and China faces the risk of tariffs from the Trump administration. So I'm neutral Aussie a little bit. I think it should outperform the euro, the British pound, but for the most part, I'm neutral Aussies because China is in the line of fire, and that is certainly not going to bode well for them. Canada. I'm also bearish Canada. We had Canadian monthly GDPs come out this morning, and it was slightly stronger. But if you take a look here, the Bank of Canada cut interest rates. Bank of Canada has actually been very, very aggressive in 2024. They have cut interest rates a lot. They cut interest rates by 50 basis points at their last meeting. They're expected to cut further, but they're starting to get the tail end of their easing cycle. So they cut a little bit. They're expected to go further. They will be cutting right now. Things are still kind of negative for them because they have the tariff risk. There's some talk over the weekend that Trudeau could step down, but then the government said he's not stepping down. I think that's just a reflection of the dissatisfaction in Canada with the current government, and the inability to provide additional stimulus, and also the risks that lie ahead for the economy. So data has been already kind of starting to weaken. Unemployment rate rise, weaker IVPMI, manufacturing activity, weaker retail sales, and they did have slightly higher inflation data. So that's a little bit of a problem. But generally, CAD is very oversold. I'm bearish. I'm kind of neutral bearish. I think it's due for a little bit of a relief rally, but there's still problems ahead. New Zealand. I'm also bearish New Zealand because, we had a drop in the business PMI. GDP contracted for the second month in a row. They're going to be cutting interest rates again. And given that it's also sensitive to China, Asia, I'm also bearish Kiwis. I'm also bearish Swiss franc. Swiss franc, they cut interest rates by 50 basis points. They said they're willing to do 0 to negative interest rates. Euro Swiss, one of the biggest problems for Switzerland is Euro Swiss, and how Euro Swiss, even with their interest rate cuts, still remains pretty much at a record low. That means that the Swiss franc is too strong because Eurozone, Euro area is their biggest partner. And so the Swiss franc is just far too strong. And they're not going to be happy with this. And they are definitely going to be looking for further interest rate cuts. And data, where's my heat map, has been really, really terrible. Inflation, retail sales have weakened. Unemployment rate has been softer. I'm still a bit bullish yen. I think the interest rate hike is going to come from Japan next year. I think that we're going to see improvements in Japan's economy. I think that that the yen, even from a stock market correcting perspective, that we could see the yen be driven up on just corrections in the market, because we had a 20%, almost 20% return in stocks this year. Next year is going to be difficult to match. You can't be sitting at record highs and hitting record highs again in the early part of the year. Maybe you can, but I think there's going to be a correction that could lead to yen strength. Now, in terms of holiday trading, I put together these tables that talk about holiday trading ranges. And remember, prepare, I'm getting confused. Prepare, plan, execute. So we prepared and we talked about kind of the general themes of the market, the the general biases, what to watch out for. Now we're in the planning mode where it's important to understand, what is the general range that we have for euro dollar and dollar yen over Christmas week. And what does this tell us? So first off, usually the range in euro dollar is around 100 pips. If you just look at from 2017 to 2023, around 100 pips. And this week and next week, it's about the same, except for 2022, where we had a double 110% increase in the range that we had. It didn't really change much from Christmas week and New Year's week. And considering that the markets are closed all the way until in terms of the holiday mode, January 1st is on Wednesday of next week, and you'll have 2 more trading days. We're probably going to repeat this type of environment where the Christmas week and the New Year's week, the ranges are going to be about the same, which means it's pretty much consolidated mode. Nothing much is going to happen. Dollar yen is slightly different. Dollar yen is kind of really interesting in my opinion. If you just look at 2017 to 2023, which I think is probably the most relevant, the last 2 years we had a huge expansion in volatility in New Year's week. Pretty much when we went from a 300 pip range to about a 500 pip range. And we had a near doubling of the trading range. Now, I'd be very, very careful of reading too much into this because in 2023, Christmas week was, the 25th to the 29th. And Monday, the 1st was on a Monday, which means Tuesday, Wednesday, Thursday, Friday was, all trading days. And everyone was pretty much back. And the year before that, the 1st was a Sunday. And the 2nd was a Monday. So we had a full January trading week in 2022 and 2023. Are you following me? If you're following me, give me a thumbs up that you understand what I'm trying to get at. And I don't have to show you a calendar. If you want me to show you a calendar, I'm more than happy to do so. So give me a thumbs up if you're following me and what I'm saying. Okay. Now, 1 thumbs up for Miss Sactor, who is paying attention. So the point I want to make, thank you, everyone's coming in, is that in 2023 and 2022, the New Year's week was a full valid trading week where we were all on the desk ready to trade. This year, it is not. This year, people really don't trade until Thursday of next week, which pretty much at some point, I'm going to be like, forget it. I'm going to be off. So we're going to be closer to 20, I would say, I'm looking at the calendar. We'd be closer to about 2019, 2020, where we had the trading range. 2019, we actually had a huge expansion of the range, but because the Christmas week was so narrow. But I think it's going to be a more narrow trading range. I don't think we're going to have as much, volatility. However, if we were to have a volatility, it'd probably be in dollar yen and not euro dollar because of the calendar, because of the fact that we do have this week. If we do have expansion, we do have Japanese inflation data, and we have the BOJ minutes. So now that we're on the calendar, let's take a look at what's on the calendar. So we're going to talk about consumer confidence and new home sales, how the Japanese BOJ minutes tonight are going to be important. The RBA minutes tonight are also going to be important. So that could provide some opportunity tomorrow. This is at 7:30 at night. So after 7:30 at night, at 8 o'clock, 9 o'clock, there could be some opportunity in Aussie if there's any surprises there. Tomorrow, it's a half day for the U.S. stock market. So the U.S. session is going to be completely dead. It's a German bank holiday. There's going to be no real movements. I don't think anyone should be trading. And then Wednesday is a bank holiday for everyone. Thursday is a holiday for some people. Thursday evening is when people start to come back if they're forced to work the last week of the year. And we have Japanese inflation data, and that's going to be, pretty important. And then on Friday, we have the U.S. trade data, which is not important at all. And then on Monday and Tuesday, those are legitimate trading days if you're in the markets, even though I think volatility is still going to be relatively quiet. We have the German labor market numbers, German retail sales numbers. Those are going to be quite important. Overall, German data has been quite weak, and I think those numbers, can end up being softer as well. And then we have Chicago PMI from the U.S., pending home sales, not a huge market mover. We have Chinese PMIs on Monday evening, so that could be interesting. Tuesday is pretty much a bank holiday for everyone. Wednesday's a bank holiday. Thursday is when the data starts to come back in, when things start to come back in and we get more information. So we get revisions to Eurozone PMIs. As you saw in GDP for the UK, for Canada, for the US, revisions happen. And they can be market moving, but they're difficult to predict. So we've got Eurozone revision data. We've got ISM manufacturing number from the US. So over the next 2 weeks, the most important event for the US is going to be ISM manufacturing. That is the most market moving. And then on Friday, we have Friday we have Chinese manufacturing PMIs, German retail sales, and that's it. So, if you take a step back, it's the minutes from the BOJ, minutes from the RBA, it's the Japanese inflation data, US ISMs, German labor market numbers, and retail sales. Only 5 pieces of data, none of which is tier 1 data for trading. Taking a look at the charts, let's bring back in my moving averages. Eurodollar is definitely deeply oversold. Eurodollar is deeply oversold. We're, still looks like it wants to touch the bottom of the range, but we're at the end of the year. We could drop down, hover around the bottom of the range, consolidate there. And remember, we looked at the trading ranges for this year and this week and next week, and the trading ranges aren't that much. And so I'm not expecting much in the way of, big moves, maybe just consolidation between 103.50 and 105. Pound dollar, same story. Consolidation expected towards the bottom of this range. Max, maybe we'll get up to 127, but not much more but beyond that. Dollar is very strong against the Swiss franc and the Japanese yen. Maybe we'll test those new highs. I don't know. But, once again, just kind of consolidate. The bull trend is intact in both. If we get kind of an inside day here, dollar yen, we could drop back down to 156 and consolidate between 156 and 157.50. Aussie dollar, very weak. Looks like it wants to test a new year-to-date low, which I think could happen with all the PMIs and the RBA minutes. The RBA minutes could drive it to the bottom. Kiwi, is not falling as much as Aussie, but still, kind of important to watch. And then we have dollar CAD. With dollar CAD, you can see that with dollar CAD, we have dollar CAD still very, very strong, but dollar CAD is very over. Dollar CAD is very, very over bought. And so given that dollar CAD is very, very overbought, there's definitely scope for a pullback, even though it doesn't seem like it's necessarily happening today. All right. So, some interesting things is that we do have a zip buy signal we had a zip buy signal in dollar yen during the European session. So it's not dollar yen, dollar Swiss. We have a zip buy signal now in dollar yen. And so you're seeing a little bit of strength in dollar yen. We had a buy signal in dollar Swiss, which led to a little bit of a move as well. This has been a fantastic year for zip. We have basically of course, past performance is not indicative of future results, but we have not had a losing month at all in zip. And, every single month, February was a bit of a wash, but every single month we've turned profits. And, over the course of the year, we've made more than 3,000 pips, 3,400 pips. In the last 6 months alone, we made 1,700 pips. And if we go all the way back, to 2023, it's 19 winning months. And so, I want to talk a little bit about how these profits are made. These profits are made, I shared this on our Discord, with our members. These profits are made week after week. There are no one-hit wonders. It's all about trading week after week. This shows you the weekly performance. It's week after week, trading twice a day at the Asia Open, at the New York Open. You can see, pretty much in this whole period since May, there were only 2 losing weeks, both of which were less than 100 pips. So these profits are made week after week, trading twice a day at the Asia Open, at the New York Open. And so, part of my success is understanding my trading strategy inside and out, and understanding the best times that it works and it doesn't work. I talk about this often. And I always have so many videos on YouTube about knowing when to trade and knowing when not to trade. And for me, this success comes from knowing that, first of all, Mondays are terrible not terrible. Mondays are a wash, which means that, it's neither overwhelmingly positive or overwhelmingly negative. It's kind of neutral. Some days I win, some days as I lose. It's about 50-50, which is not good enough for me. So I took Mondays off of my trading calendar. I only trade Tuesday, Wednesday, Thursday, and Friday. I also don't trade ahead of major news reports, and I only trade after it. I also only trade at the New York Open and the Asia Open. And, I talk about this a lot, how I trade at 8 p.m. New York time, and I put on my trades at, 6:30 a.m. New York time. And we get it's about 3 to 4 trades for each session. So these pips are made every single day, week after week, with 3 to 4 trades per session. It's not one trade that made, or 2 trades that made the month. It's about consistency. And this consistency and trading consistently 3 to 4 trades at the Asia Open and the New York Open creates a lot of data. And that data is what builds my confidence. So, I love when we have good trading weeks. I love to talk about the how we should feel when we lose, because there will always be, and I'm promising all our BK traders here, that there will be losing weeks. They'll be losing sessions. They'll be losing days. They'll be losing weeks. I mean, we saw that with the weekly performance. There are losing weeks. And when sometimes there's 2 losing weeks in a row. And oftentimes there could be 2 losing sessions in a row, like a day that just doesn't go right because the market is too overstretched. So when that happens, how can we feel? What can we think? How can we have the emotional confidence to keep trading? The way we have the emotional confidence to keep trading is by understanding the results. My confidence in my trading strategy and my ability to control my emotions, which is probably one of the things that people struggle with the most, which is trading psychology, how to control your emotions, is by having data, and trading your system the way it should be traded every single day, so that that you're trading your strategy inside and out, and that that even when you have those losing weeks, for me, I trust that Zip will come back. So how are these profits made? Week after week, Tuesday to Friday, 2 times a day, trading the Asia and New York Open. Not trading Monday because the odds of profits are only 50-50. Not trading ahead of key data. Having small, steady, consistent profits. And I also personally am more aggressive in the front of the week, because my goal is 100 pips a week. And one of the things that transformed my trading the most, and I'm hoping that I'm not just telling you about my own trading performance, I'm hoping that some of these tips can help you think about the way you trade, which is that I intend to be more aggressive in the front of the week because I'm trying to meet and reach my 100 pip a week target. And then I tend to be more defensive at the end of the week as I'm trying to protect the profits. Now, that is good and bad, because oftentimes those profits for my other traders tend to extend much more. We could have really good trades on Friday, but I'm only taking a sliver of it because I've already made my 100 pips a week and I want to protect it. And that's why sometimes we end up with losses, because I still have to be forced to trade even though I don't want to. Having a short target and a long target. This is also very important. We usually close half of our position at something that's short, and then we try to have more juice in the second part of the position, because we want to trade defensively. We don't know how much more a trade can go. Sometimes it's a small move. Sometimes it's a big move. And staying disciplined to my own trading strategy. How could I have done better? Not front running Zip. Yes, it happens. I am only human. Sometimes, I will front run my own trading strategy. So I could have done better by not front running Zip on some trades. Sometimes I will trade. I call them exploratory trades outside of my Zip time. So, I'm supposed to put my Zip trades on at 6:30. sometimes at 10 a.m. I see something, or during my live stream at 9 a.m. with our members, I'll see a trade that looks good that is outside of the time that I'm supposed to put it on. I put it on, it ends up being a loser. So not trading outside of the zip times. And that is 8 to 9 p.m. for Asia entry and 6:30 to 7 a.m. for New York Open. And then also letting profits run more, especially during the Asia session. I love to trade the Asia session, and the Asia session is truly my best trading session to trade. And it is the most trending, in my opinion. And I love it because sometimes oftentimes I put the trade on, I wake up in the morning, and it's run into profit. So there tends to be a lot of continuation in the Asia session and the European session. And I could have done better by letting the profits run more in the Asia session. So while, I did want to share how well we've done this year, I hope that some of these explanations of how the profits are made and how I felt like I could have done better can help you in your trading as well. If you learn something from this, give me a green heart, because hopefully that this can help you make some profits in the new year. So give me a green heart if you found some of this information resonated to you as well. And, before I turn it to Boris, I just want to share with you just a couple of personal things about the 10 things that, I'm kind of thankful for, the 10 things that, I'm kind of thankful for this year. So the first thing, I'm kind of in year-end mode. The first thing that I'm thankful for is I got to spend another holiday with my 97-year-old grandpa. He's healthy and strong, and I am forever thankful and grateful for that it's another earned year for me. I'm getting emotional there. I also, this has been an incredible year. I mean, it doesn't look like I lost weight, but it's been an incredible year for me in terms of my running. It's like, I don't even know what happened, but I, started running a lot more, and I hit a personal record of over 4 miles. I'm slow. Yes, I don't care that I'm slow, but I hit a personal record of 4 miles on my run, and I do over 3 miles consistently. I do a 5K every single time I walk out the door. So I am very, very proud of myself for that. And that's been something I've been very, very thankful for as well. I'm also thankful for the fact that I released my 6th trading book. And I actually got, hold on a second. I'm going to come right back with my book. Actually, I have no idea where it went because my husband hid the box. So, because he was wrapping Christmas presents. But anyway, it got delivered to me this weekend. I'm so excited about it. It's published. It's my 6th trading book. I interviewed 13 traders from trading champions to prop traders turned fund managers to some of the more popular funded prop trader names. So if you want to buy yourself a Christmas present or something that gets delivered in January, please, give this a read. There's a lot of incredible trading tips from all of these traders. Some of the really interesting things that I found is that a lot of these traders, the way they traded in the beginning and the way they learned to trade is still the way they trade today. Of course, with enhancements, with improvements, with, a lot of things, but it's a really, really great read for the holiday. So, I encourage you to read that. Another thing I'm really proud of is that I got featured on Charles Schwab Inside the Mind of a Trader. So I'm really proud of that. I'm really, it's a real honor to be featured as one of the top traders by Charles Schwab. So, I'm really proud of that. And, I'm glad to be, this is something that I'm thankful for this year. Also, I'm thankful, as I said, we've had a fantastic year trading Zip. And so it's been a great year trading Zip. And let me see, where was this? Yeah, it's been a fantastic year. 19 straight months of wins for Zip. I'm also really, really grateful and thankful for the fact that the stock market is hit a record high. You know, that's been fantastic. Hold on one second. I'm really thankful for the fact that the stock market hit a record high. I'm also, hold on. I got to text my, okay. I'm also thankful for that the stock market hit a record high. It's been a fantastic year for my investment accounts. Bitcoin also hit a record high. So my crypto holdings are doing really, really well. And I got 3 more things that I'm thankful for that I'm going to share with you. This is the 20th year with my husband, and my husband is not Boris. This is my husband, Rob. And this is 20 blissful years with my husband. My son aced, hit 95 plus every time on his math test. I'm not going to show you a picture of my son. And then ultimately, the 10th thing that I'm thankful for is all the quality time that I got to spend with family and friends this year. It's been a really, wonderful, enriching year. I feel very personally and professionally satisfied, and I'm looking forward to 2025 being an even better year. So I'm going to give everyone a fist bump, hoping that it is going to be a rewarding year for you, as I hope it will be for me. And I hope that, this has also been a good year for you. So thank you for joining me on the last live stream of the year. Yes, I'm also very proud of all the cooking I did, but I have to admit I did a lot less cooking this year because I was so busy with everything. I think I did a lot more eating, which is why even though I can run the 5Ks every single time I walk out the door, I didn't lose weight. But, life is a balance, right? So yes, Happy New Year, everyone. Happy holidays. Make some money with Boris. I hope, you found something valuable in coming to today's session and spending your, what could be your holiday week with me. Thank you.
Hi, guys. How's everybody doing? Good morning, good morning, good morning. I'm just thankful to be breathing. I don't have I have more modest goals. Although I will say that my daughter got 105 on math. So proud of that. We're both definitely very much math-based parents. Love having our children do well. Hi, Denise. Good morning, everybody. Happy holidays, Merry Christmas, Happy New Year. All the great holidays to everybody across the board. Let me put up my my view here. Just one sec. Hang on a second. Let me get. I think this is the one I want. Yes, and I want this. Okay, cool. Yes, we are very much in flow. We're looking good. I see you guys over here on the side. Let me do one other thing here. I think Apex is going to be 71% off. Let me just add this up. Let me put this up because I don't want to mislead you guys. I think it's 71% off. I want to put the ticker up here. Yeah, there we go. My buddies at Apex. I have so much cool stuff to show you. Last day of the year, but over the weekend, I completely redid my indicator to give you so much more richness of information, to make it such an incredibly valuable indicator. I'll go through it a little bit. It's very quiet right now. Just to let you guys know, the only thing I have right now that I'm floating, which is not going anywhere, not doing anything for the last literally hour, is this long gold trade. I took the signal here. It's just floating, doing nothing. If it hits my second tranche, I'll let you know. If it's my third tranche, I'll let you know. But it's just doing absolutely nothing. Earlier today, I actually did have a couple of nice trades here in S&P, where I was able to to buy the S&P and resolve it all using my new technique. But right now, as I'm looking, if we're looking at the S&P, and I'm looking at NASDAQ, and I am looking at gold, which is the three things that we trade, there's just nothing going on. The only gold keeps giving me these very, very seemingly strong buy signals that go nowhere. So that's really all that's going on. There's no signals at all in NASDAQ. There's no signals at all in the S&P. So we're just going to wait and be patiently, see if there's anything happening because of the day is very, very quiet. But what I want to show you is all the cool things that I did in the new indicator. And for those of you who want the indicator, there's two ways to get it. The best way is to simply sign up with our friends at ACAP, and there's a whole bunch of packages here. But if you do like a $5,000 deposit with them, you're going to get full 6 months with an indicator and everything else to your things. Oh, you know what? We have a buy. Let's do this. We have a buy in the S&P. I'm gonna show you what we're gonna do right now. I'm gonna go buy market the. So let me show you what we're gonna do. I bought market S&P, right? And the best way for me to kind of describe a lot of my strategy now is to kind of show it to you. I'm going to buy, I'm going to put a second tranche. I may not need it, but where am I? 604.75. So 6,075 will be my second tranche over here. And then underneath that will be in the S&P 96.75 will be my third tranche over here. So what you see over here is basically just kind of let you understand how my whole structure works now is I have a buy signal, right? And the key thing about scalping and the thing that we do all day long is that scalping, which is very short-term trading, is not like it's much more like quantum physics rather than Newtonian physics, where Newtonian physics is very precise. You have a formula, stuff moves, it's all very physically calculated. It's when you're doing swing trades, you have like one target, one stop, nice and clean. Everything is all designed. When things move on a shorter term basis, whether it's prices or atoms, everything else, they're actually in a much more excited moving mode. See, it's a back and forth, back and forth, back and forth movement. So in this particular structure right now, what I've done is I've bought the second tranche over here. Looks like I'm going to buy the third tranche. Looks like I might get stopped out on this trade. We'll have to see. So now I have like three tranches working with my terminal stop here at this 92.75, right? However, here's hopefully my strategy will work. Maybe it won't. That's how it works sometimes. If we get it, oh, there we go. And I'm going to get rid of everything else. And my strategy, I'm going to exit myself on all this stuff and resolve myself on all these trades. So I kind of, dove you into my strategy without explaining my indicator fully, but it's much easier to show it to you than to try to explain it. So what you saw here was me buying three tranches. When it reached to the third tranche, it generally bounced back up, right? Because you don't know what's the proper entry. You have basically a pocket of possibilities, it's called a cloud of possibilities in quantum physics, as it is, I believe, in sort of scalp trading. You have a range of possibilities of where there's proper price, but you don't have a single price because prices move. They're so excitedly move so fast. So I started at I believe was it 604s, then I bought the 600s, then I bought the 96s, and then it bounced right back up and resolved. Now the cool thing about my strategy and the cool thing that I really like about all of this is in the old way that we were doing stuff just last week, I would buy, get stopped out, buy, get stopped out, buy, get stopped out. So the mathematics of that is that if I get stopped out after 3 times, which is my total terminal last position of the situation, it's a 7x loss, right? You win 1, you lose 7. Pretty negative, risk reward, but the idea is that it happens very rare to you, right? In this particular structure of how I do my inventory management, the risk is even greater. It's 11x. So if I would have gotten stopped out here, it would have been an 11x loss. In this case, the loss was $20 target because I'm trading small. This is another thing that is very, very important. I would have been a $220 loss on a $50,000 account. Not a big deal. I have $2,500 loss budget. And it would have only been a $220 loss on this whole thing. However, and this is where the however comes in that is so interesting mathematically. Because I'm not stopping myself out, my actual resolution on this trade was 3x, 3 times my risk rate. So $60 win of this particular trade instead of a $20 win. And when you're doing this on a consistent basis, the whole idea is that, you really want, if you're doing this properly, you're taking your signals and you're doing everything correctly, you should only get stopped out, 1 out of 7 times. Even if you get stopped out 1 out of 6 times, the times that you're generating profit, it's not just 1x, it's 2x or 3x, and sometimes it's just 1x on the first trade. And that makes a huge difference on the net P&L. Just to give you an idea of the numbers, for example, Friday, when we were trading NASDAQ, if you had used the original inventory structure, which was just like, buy, stop out, buy, stop out, buy, stop out, there was 8 trade resolutions. One of them was negative. So it basically was a scratch. You won 7, and then it was 7x loss. It was, it was a tough day. One-way markets. I was trading counter trends. So, it was definitely a hard day, but still, worst comes to worst, it was just basically a scratch. However, using this particular situation, same idea. You were trade, 8 trade positions. One of them stopped you out completely. So that was a minus 11 on the stop out. However, because this was 2x and 3x and 2x and 3x continuously as I was making money, I was up 17x on 17x, meaning x is the fixed amount of profit that I have. So 17x against 11x, you're net positive 6x. That's the advantage of this particular approach. It's not that you're not taking a stop. You're just letting it breathe a lot more. And when it comes back, the tranches that are deeply negative become much less negative, and the tranches that are positive become super positive. So the mix of the two provides a much more potent profit mixture than the single profit mixture of just stop out, stop out, stop out. That's why in this particular situation, this layout that I just showed you in real life trading really works much better, in my opinion, as far as structure goes, right? So hopefully you understand it. We'll see if we get a couple more trades. But in the meantime, the actual indicator itself, and by the way, it looks like I'm just watching to see if I get another buy signal in NASDAQ. Let's see what in the S&P. Now, so NASDAQ has a couple of buy signals that have gone nowhere right now, right? And I'm just kind of wondering if I should take them right now. It's tempting. We can take a small position in NASDAQ. See, the cool thing is because I'm trading micros, none of this stuff is, let me see if I can do this. All right, buy market. Ooh, okay. So here we are on NASDAQ. What did I buy? I bought 630.50, right? 630.50. My target is going to be 650.50. But here's what I want to show you is I am setting up a defensive structure. 630 would be 610.50. 610.50 twos, and then one more underneath that at 590.50. Oh, so I guess now I'm too long. 590.50. Where's 590.50? I may get stopped out on all of this, but I want to show it to you anyways. It doesn't matter. 590.50 at the 4s. Okay, so I have a 4 tranche. But now, if this second tranche, all I have to do is for the second tranche, which came in at 610.50, if that goes to 630.50, the second tranche, I'm actually 2x. I'm going to make 80 points or $80 on this particular trade if this bounces back just to the second tranche P&L, because this P&L will be 0, but this P&L will be 2 times my size. So I just want to show it to you. I guess I'm, it's never non-trading with Boris. I never get a chance to fully explain my indicator because price action always comes in. But these are all legitimate trades, so I want to make sure that I show you the full trades. And here we go. Looks like are we going to get up there? Close enough. I'm going to just exit everything out. So I've exited everything out. What's going on over here? Wait. Because I'm still holding the gold position, which is just doing nothing. So actually, the gold position now. Where's my gold position? Hold on a second. Yeah. So then I have like a gold position, which has just been a dog, really doing nothing. I bought my first position was at 31. Second position was at 33, 30. The third tranche of this gold position will be 27, right over here. And if I buy the 27s, gold, it looks like it's really diving. So gold is just showing zero upside potential. But here's the point. Okay, so now I'm in my third tranche. If I hit 24, I'm out of gold. The gold just simply stops me out. However, I bought 27, and if 27 goes up to 30, my whole position resolves. And actually, I'm just watching this very, very carefully right now to see where my gold position is. All right, whatever, we'll see. 30.4 would resolve my whole position. So we'll see. We'll see if this thing bounces. It's been a real dog as far as upside signals go. But the cool thing is you see how like my NASDAQ, even though I was wrong on the first, I was right on the second, and that's all it did. I just had enough, just gave me enough move on the second to totally resolve me on the whole position. I could have actually gotten a little bit more even on the second, but whatever. The point being is trading it this way with a proper setup. But if you guys want to see how my trade evade is set up, it's very, very simple. What I've done is I've done 3 DOMs. Each one has the proper sizing, 1, 2, and 4. What this does is it eliminates the need for me to make any changes in size. I know this is the 1 size, this is the 2 size, the 4 size. All I got to do is lay out my orders. First, my entry order, then my secondary order, my third order, right? And then once the profit hits, all I got to do is hit exit, market, and cancel, and that will take out the whole, close out the whole position on everything I need to do. So it's a very, very effective, efficient way of running the trade, right? And I'm getting you know what? I'm going to just exit out of my total gold position because I'm up on the day here nicely. Here's gold. And I just, gold was a dog, and I really didn't want to bother with it. I had 27.4, 30.4 would have resolved me with a 3x, with a $90 profit. But because gold was such a dog, and because I have zero, and I don't want to focus on it, I just took like I think a $20 profit on the whole position. But fine. The main thing is this gold position, which started out over here and was a complete dog, still turned into a total profit by using this particular structure. So I know I threw you guys into the lines then here, but just give me a thumbs up to see if you guys are feeling are feeling me on this. If you understand what I'm doing, you're kind of getting what I'm doing. Let me give you the Apex link because the Apex is really, really important. The best way to do this, in my opinion, if we're passing prop tests, if we're trading prop tests, or if we're trading our own account, but definitely we're passing prop tests with my friends at Apex. The single best way of doing this is to segregate your accounts. So I have like 6 $50,000 accounts. I've only just been running 2 of them this morning, but you could literally, if you really wanted to, you could run 6 accounts. One account is gold long, like gold trend trades. Another account would be gold counter trend trades. Another account would be S&P trend trades, S&P counter trend trades, NASDAQ trend trades, NASDAQ counter trend trades. So like that's 6 ways of dividing it. which is super, super diversified because at that point, there's very little possibility that every one of those accounts will have a net loss for the day. In fact, I would say 5 or 6 of those accounts will almost always have a net win for the day. Right now, today, I'm not doing it this way. I'm kind of just basically running a trend account. So you could do, that's one way. You can divide it by both trend and instrument, or you could do it by just trend, counter trend. And I'm just running one account, which is a trend account, which is like in this account, I ran trend in gold, running trend in trend, meaning I'm taking, the trend trades over here. And another account, which is going to be counter trend trades, right? So like right now, we're looking at gold. Gold is signaling in my new pumped up, great looking BFF scalping indicator, a strong sell signal. Should we take it? Should we go back into gold and just be, gluttons for punishment? Well, first of all, we have to have the sell signal, so it's not coming up there. Maybe we will. Maybe we'll give ourselves that chance. Let's take a look what the S&P is doing. Does it give me any signals? S&P not giving me any signals. NASDAQ not giving me any signals. We're just range trading. So gold is the only one. No, gold is just also not doing anything. So no signals. It's obvious that we're going to be choppy. But whether you kind of divide it across 6 accounts or just 2 accounts, the critical thing in terms of money management, and I'm going to use a $50,000 account as our gold line base because that's the best account to trade in Apex. You need to make $3,000. You have a $2,500 drawdown. So if you're trading S&P, your drawdown is $220. If you're trading NASDAQ, it's $440. If you're trading gold, it's $330, right? So it definitely is best to separate them by instrument if you really, really want to diffuse your risk. But even if let's imagine a very unlikely day where you're stopped on gold, stopped on S&P, stopped on NASDAQ. That's 330, 440, 220. That still does not blow you out of your account. This is all trading micros, right? Now, generally, if you're doing this right, and we have a relatively good-looking structure, you should just simply be surviving you should be resolving every single day. And if you're resolving every single day, let's say the average winning trade is between 20 and 40, let's call it 30. You do, 5 to 7 resolves per day. I already done, I'm just looking at this particular account. Let me just tell you what this account did today. This account where I just bought. So I'm done about $115 to the good. I could have done another $100 of just simply away from desk. And this is all super quiet, pre-New York, trading across gold, NASDAQ, and S&P. So if you're doing $200-300 profit per account, 10 to 12 days, and you're funded, right? Maybe, if you're, let's give ourselves a couple of stop out days. And remember, the stop out day isn't like if you're minus 220, that doesn't mean that's your loss for the day. That's just one loss against probably another, $50 or $80 in profit in other trades that are resolved. But overall, basically, the whole idea is very, very realistic, an incredibly risk control method to fund your $50,000 account within 15 to 20 trading days. I think really you could even do it probably within 10 trading days if you're really focused. But that is the way to do it, because explain to you why that's the way to do it. First of all, it's very realistic in terms of how things going to compound. More importantly, that's the way Apex likes to see it. They want to see you be consistent. But the real reason why this is such a great approach is when you go to the funded stage. And in the funded stage, they have a whole bunch of crap there that make it so much harder for people to win. You can't lose more than what is it, like $750 on a trade, right? In a single trade, you got to make a couple $100 consistently. All the shit that they make you do, because obviously they make it much harder for people to collect on the funded side. This all checks the boxes. Doing this in the pre-funded stage doesn't change anything in the funded stage. So you are fully prepared for the success that you want to achieve. That's why the strategy is so good. So you have there are 3 things, in my opinion, you need to really do well. Number one, you need a strategy, which we obviously have with scalping. Number two, you need the tool, which I haven't even talked about yet. And number three, you need an inventory management, risk management system. And I think this is the best risk management system that does well, right? So let me see if I have any comments here from. Impossible to manage 6 accounts if you don't have many screens on computers. You know, Kathy trades from one screen and she does a whole bunch of stuff. I think it all depends. I obviously have I have a 2-screen 4-window setup, right? So yes, I can manage a lot. But honestly, the trading part of it is just on one screen, and I'm just simply switching between accounts. It's not that hard. I think 6 is a lot. You're right. 6 really requires a lot of stuff. But 2, which I think a reasonable thing, a trend account and a counter trend account to diversify your position, I think is perfectly fine. You know, totally works. And somewhere in the Rockies, I don't know what this means. So I don't know what your question means. So maybe you could rephrase it. What does this mean? Indicators on your charts, labels. I don't know. No, they're not labels. They are signals. They're signals, and I'm going to explain to you the signals, hopefully very methodically, as soon as I have some breathing space. So, okay, we have a little bit of breathing space. We're gonna ignore anything that's coming in. Yeah, you know, so Board Panda is telling me to get 2 stacked 35-inch curve monitors. So I have it the other way around. I have like these vertical monitors. I have double vertical monitors that are really, really cool, which I really like. I wonder if I could show this to you. I can't show it to you because it's hard to. Yeah, you know what I'm gonna do? I'm gonna take a picture of what I have, and then post it on Twitter, and you guys can go look on my Twitter. Hang on, I'll show you what I have, which I kind of really like as my setup. And this is the Mac setup, but I also have like a PC setup. Oh man, where is this guy? Wow. Okay, so I'm gonna post this on Twitter, and you guys my setup post. So I like this setup, like a vertical setup, but you know, you guys can do what you like. Anyways, what I want to ask you. So let's take a look at my indicator because I think it's super cool the way it works. First of all, one of the things you'll notice here is you can look at how volatile an instrument is in purely user-defined terms. In other words, you go into settings and you could say, give me how much volatility was in the 1 day, how much volatility. Well, this is S&P. You can see today is obviously a very, very low volatile day. Now, the way I calculate volatility is what I want is what is the ultimate high, what is the ultimate low, the topmost, how big is the bar divided by the notional value of the underlying, right? So obviously the smaller the bar, the lower the range, the wider the bar, the higher the range. And you can see how, like, over the last couple of days, let's just go maybe 3 days wide, right? Watch the calculation go from 80 points to 234 basis points. That's 2.34%, right? Now that doesn't mean that it moved up and down 234%. It means from the bottom to the top, there was 234 basis points of movement, because that's what we're interested in. We're interested, the wider the range, the greater the possibilities for us to trade. The narrower the range, the less possibilities there is for us to trade, right? So everybody understands what I'm saying? So that's a cool thing that I just added into the table. Then, of course, we have the ongoing calculation of the moving averages to give us the overbought, oversold conditions. And I define my overbought, oversold conditions as around 25 basis points, right? Which I think is probably like pretty good. So if the 3-day range is 230, you take a 10% of that, 25 basis points is probably a decent, a decent thing. And again, this is something you can configure. I configured it here at 25, show reversal only when moving average is wider than 25 basis points. It stopped showing me trend when the thing gets to 20 basis points or higher. So today it's doing nothing. I can't even find any reversal signals. Now, the cool thing I want to show you is that, first of all, the indicator does not only requires one single indicator on the chart. And I'm going to unclick all of this so you can actually see that you can see trades in continuity mode. That's the momentum mode, right? And here's an interesting thing of how it works. In the momentum mode, it will show you that these are sell signals in a downtrend, right? However, and this is a key thing for those of you who are asking me, you want to see those high-low labels, divergence labels. If the sell signal is higher than the prior sell signal, it's actually green. It's telling you there's a divergence here. It's telling you that the sell signals here are weak. They're not making lower lows. They're making higher lows. That's weak. There's a divergence here, and that's a lot of times a sign for a move higher. Now, in this case, the signs are very tepid because we're in a quiet environment. But it's still, basically, you never want to be shorting in a momentum mode on a green downward arrow, because that's a divergent arrow. You only want to be doing it on a red arrow. So that's continuity mode. Now, reversal mode, you can have it both of them or just one. So let's say I put the reversal mode on. The reversal mode is puts you into like the retrace mode. And again, same idea. Reversal signals are shown by squares rather than by arrows. And again, here are legitimate good sell signals. This one is problematic. Now, this one actually works. This is a high-low reversal signal, but it's not as good as as these two over here. So reversal signals give you the same idea. If it's a red, underneath the moving average, you want to take those. If it's a green, it's a caution. And then finally, there is the counter trend signals. And this is the other really, really cool thing about it. In the counter trend signals, what you want, remember, it's a counter trend signal. You actually want the green circle. The green circle tells you, oh, this is probably the bottoming of the counter trend. This just tells you it's possible counter trend, possible. But this actually tells you, yes, there's a real counter trend going on here. You may want to initiate a trade here, which you do, right? And finally, this is the part that I love. This is the one I made myself. I like just using the black candle mode. In the black, as a matter of fact, I wonder if I take this off, does this work? Oh, that's interesting. No, it doesn't. So in the black candle mode, I have to have both continuity mode on. But what happens is in the black candle mode, I get rid of all the candles and I just look at signals, and it makes it super clean, because to me, the single best signal is when the reversal signal and the momentum signals coincide. If they do, that's a great sell structure for me. And on the reverse side, on the counter trend side, I simply see these things going on here. You see how this is really good. It doesn't always work. This gives you a what's called a strong buy signal, but it actually fails. And this is a sell signal that obviously succeeds over here. So far we're just chopping around, not really doing much. Lastly, I put alerts on all of these things, and this is the cool part. Each alert is very intuitive. So if you want the triangle alerts, I actually tell you this is a triangle alert. If you want the square alerts, you have those. If you want the black candle, just strong signal alerts. If you want the counter trend signals, which are defined by circle. So everything that is visual on the chart is also textual on the alerts, and you can set those alerts, and they line up exactly to how you want the alert. So overall, really, really cool signal. Yeah, they are kind of square. It's just a very, very cool structure to let you analyze all of the trades in a very methodical manner. So hopefully you guys really like that. Hopefully you guys enjoy the indicator, the new version. If you guys have you tested it out? I'm just curious. Those of you guys, let's do a little poll here. We got a little time here. Have you tested BFF 2.07? Let me know. I'm just curious. And then, give me a thumbs up if you like it or not. But I think it's really cool. I really, really love it. it makes it so much easier for me to pick trades. I don't have to, it especially in black mode where all I'm just looking for is the signals. I don't have to worry about anything else. Everything looks really, really clean and cool. Did this thing pop over here? What the hell was this? What the fuck was this? Was there a time ago we had news on? Oh, we had news on the. What was the news? What was the news that this thing popped up so much? What the hell was the news? Consumer confidence. Oh, consumer confidence was shit. Seriously? Wow, that came in low. Wow, no wonder that's surprised. Wow, that's interesting. So that's a very low consumer confidence that makes the market thinks that Fed is gonna cut rates, and that spiked the gold number. But so far, not really having much of an impact. Wow. Wow, that's a surprisingly big drop in consumer confidence. Let's see what they're saying about it on the interwebs. Let's see what Forex Live is saying, and then let's see what they just. By the way, you got to love the Monroe Doctrine. Everybody following this. We're gonna own Panama and Greenland by the time we're done. That'll be funny. Wait, where's I just want to see new homes, consumer confidence. Nobody's making any comments on consumer confidence. Let's see. Technological strong gains in semis, blah, blah, blah. Nothing much, huh? Okay. All right, we'll leave it alone. That was a very, very weird number. Yeah, they moved the news up from tomorrow to today. Yes, definitely makes sense. Definitely makes sense. Let me kill this. Okay. So, let me do. Okay, so I see a lot of people. Who has tried this 2.07 and likes it? Give me a thumbs up. I'm curious. But basically, you guys see that there, we were trading on either side of the 200 SMA. Very, very tight markets. Nothing much really going on. In that particular order, by the way, that's the other thing that works your way. If you're trading tight to the 200, it doesn't really matter if you initiate your trade short or you initiate your trade long, as long as you have a wide enough envelope, which in this case I have like a $9 envelope around gold and a $12 envelope around S&P and a $60 envelope around NASDAQ, which I don't know if that's really going to be wide enough. You can resolve those trades because, because it doesn't matter whether you sell it or buy it. As long as it magnetizes back up to the moving average, comes back for a mean reversion trade, you almost don't need to be that good on directionality. But obviously, you want directionality to be your friend here. In other words, you want the indicator to help you with directionality. Although, in gold, it really was pretty useless today. And the S&P was starting to make fresh lows. So this, to me, is interesting. We're now getting 28, 29 wide, which now is going to put me into counter trend mode, which I'm probably going to go into my counter trend account once I get there. But here's the cool part. And this is what I wanted to show you. The new version of the indicator does not allow you to just take any counter trend signal that shows up. You want the green reversal signal. You want, like, when I'm buying counter trend on a sell-off, you want some semblance that there is a bottoming, there's a higher low, and that the market has done its puking in the near term. And all of this is shown visually to you through the indicator right away. So you don't have to guess, which is really, really cool, right? Hopefully you guys like that. So it may probably take another, I don't know. I got about 10 more minutes with you guys because I have a meeting I got to go to. But what I will say this, I'm really, really happy with this version of the indicator. I don't have really anything else anymore to do with it. I think we're going to probably sign, seal, and deliver it, make it into like a final product. I may just rename it also. And beginning of the year, we're just going to use it. I'm going to go into Kathy mode where I freeze my feature set. I don't sit there and try to renew it, because at this point, I have everything I need to be able to trade this well. Doesn't mean every day is going to work. Doesn't mean every trade is going to work. But the preponderance of trades is going to work, and I have a good system and structure. And one of the things that I like about dividing, the trade ideas into even just simple trend, counter trend, you diversify your approach. Like a day on Friday when it was just all trend, you would have made a fortune in trend trades. You didn't, every single instrument in trend worked 5, 6, 7 times in a row. So at $30 average trade, you have like 8 winning trades in a row. That was, $600, $800, $700 in the trend account. You literally maybe, did 35% towards your target, towards your funding target in just that one day. So yeah, what's generally going to happen is in strong trend days, trend accounts. Oh, one last thing I wanted to show you. Yes. Okay, so the other thing I wanted to show you is for those of you who are truly big momentum junkies, right? Let me show this. I can't really, let me see if I have this. It's really not the case here. Because today it's not a strong momentum day. But if you're looking to do this on Friday when you had a super strong day, yeah. So Friday, it rips really higher, right? And if you get in a situation where you have reversal signals, right? Counter trend signals, reds, followed by a green, followed by greens. These greens can actually be taken as trend signals. You could actually say, oh, there was a red followed by a green means we're going higher after a strong indication of a pause. Well, then, I'm going to take this. There's a green after a strong indication of a pause. It's hyperdrive. It's a hyper trend move. These are rare days, but in those hyper trend moves, these things are super strong signals for further upside. So the irony of the whole thing is these counter trend signals, which generally supposed to signal counter trend, can also show you super strong trend signals if they are constantly defeating the reds. So in other words, you have all these reds, and then all of a sudden it pops up green again. It's just resumption of this whole trend. And the cool thing is because it's coming in the retrace mode, you're basically buying it at a very, very cheap location. You're buying it at a very cheap location here without any retrace possibility. So it's just a kind of a final useful analytical aspect of this particular tool set. But as far as today goes, we're just twiddling our thumbs. Let's see what NASDAQ is. I see no signals just yet. We may come back down, widen ourselves up. We're 40 basis points wide. If we start bottoming out and then finally starting showing green circle signals, that's when I want to start trading counter trend on NASDAQ and the S&P. Okay. How's that sound, guys? Everybody good? Okay. So I think I'm very happy with the indicator. I'm happy with the trading structure. I'm happy with the risk management plan for 2025. We're going to put all this in play as we always do. Real time, real trades. No fooling around. We actually managed to do a couple of good trades today. We resolved the NASDAQ trade. We resolved the gold trade. I did not trade S&P with you guys, but obviously I resolved it earlier. Given the fact that these are slow markets, not bad. Tomorrow is, like Kathy said, it's just going to be a dead market. By the way, all of these signals and ideas, they were kind of fast on New York Open. They're much easier and slower to manage during European Asia trade. I'm up at 4, and obviously I'll be up with you guys next year trading. I sort of adopted this whole thing from trading Bitcoin, which is like where I got this whole idea of like, hey, why don't we just buy the dips, sell the rips continuously instead of just simply stopping or stop. Because in Bitcoin, it's impossible. It just stops you out continuously. If you just do stop and stop and stop, it's a massive drag on fees. But I realized, that the P&L and the actual mathematics of this are far superior. So hopefully you guys really like the new inventory management system. But anyways, what I was going to say is, yeah, we come back on the 6th. We're going to trade all of this stuff in full form. In the meantime, have fun with this during the quiet times. And it is very, very good actually during the Asia-European trade, where the markets are easier. They don't really have these big dips and high rips. They're moving relatively slow, so you have a chance over a half an hour to an hour to resolve most of these trades instead of having to resolve them like I did in 30 seconds. But regardless of how it works, as long as you have the system, it puts you on the right side of the profit most of the time. You don't get anything in fees trading in Bitcoin. No, but what I mean by fees is spread fee. Like if you're getting stopped out, you're paying spread all the time, That's what I mean by it. It's not, I don't mean like actually Bitcoin fees. I mean brokerage fees. So that's why I originally developed that system for Bitcoin, but it's actually very, very efficient for prop trading as well. That's what I meant. You all should know, never take anything I say literally. Kathy, to this day, for 25 years, I'm trying to teach her never to say anything. Like I'll say, this is the worst possible person ever. And she's like, how could he be possible? Because she's always takes everything I say literally, and I'm always exaggerating everything to the millionth degree. And she's like, how could he be possibly the worst person ever? And I'm like, oh, please. Nothing I say is meant to be taken literally. So that's what I mean. Okay, guys, thank you again. A lot of fun. Hope you guys got a preview of this thing. I am going to, by the way, I did put together I don't have the videos. I'll put them out. Hang on a second. Let me see if I could do this. I want to do this, but I need to make sure that, just one sec. Okay, let me edit this out. If I can, this will give you the video explanations. Okay. These are video explanations, but I'm actually going to create a whole course over the Christmas break on BFF, sort of, why scalping, how we do this, how each particular analytical framework works, so you can do whatever is best for you and make it your own. Okay. All right, my friends. Thank you again. Look at that. See, we're getting a buy reversal signal a countertrend signal in Nasdaq, but we obviously going to see if it's going to give us a green circle or not. So until we get a green circle, it's really not a countertrend signal. Okay. All right. Thank you so much, guys. Everybody have a happy new year, new holidays. I'll see everybody on the 6th. Okay. Enjoy. Those of you who are in my room, enjoy. Those of you who want to try this, let me give you the discount link for our room right over there. But generally, get the Apex accounts. Let me do the Apex link, and if you want to get this for free, just simply fund an account with ACAP, and we'll give it to you for free. Everybody enjoy. Thank you so much, guys. Everybody have a great holiday. I'll see you later. Bye-bye.